What kind of visibility do you have then for the winter months, given the uptick once again in the pandemic?
Well, you know, we were encouraged now enough to give a guidance for 2020, so at least we see some more visibility to be in a position to talk about what we expect for the rest of the year. It is less volatile than we have seen it in the second quarter and obviously in the first quarter. Still, there is volatility in our markets. And our guidance, which we were giving now for the fourth quarter, by the way, 4 to 6% in the world car production below prior year, so still a weaker quarter. But we think pandemic effects on these numbers should not be too big. But again, volatility is there and predictions are still more difficult than they have been a year ago.
What will you wait for before taking a more optimistic stance, Wolfgang? I mean, we've had news this week about a vaccine, for example. What would you need to see to enable you to make more positive estimates for 2021?
Well, obviously, we see consumer demand really kicking in and the demand for cars really kicking in. And this is what at the moment we don't see. And I think all this information about a vaccine coming next year is quite early at the moment to expect effect already on what we can see in the call-offs from our customers for cars and the cars sold. Don't forget, in addition, that we are in a technological transformation area for the car industry, moving from combustion more to electrification, moving towards more autonomously driving cars. We have technology for that, but all this has as well an effect on consumer buying behavior. And these two trends, on the one hand side, the pandemic, on the other hand side, these trends in the automotive industry are there together. It is still true that we don't expect for the next years to come back to the highest level which the automotive industry has seen in 2017. We think this will still take a while, some years, before we finally reach that point again.
You've scheduled an investor day for next month. What are the key topics that you're going to try and address during that investor day? It must be a bit difficult without a new CEO as well.
While the topics which we will address are the topics mainly on the technology change in automotive, in the automotive industry, and our contribution to that, to show how well we are prepared to deliver high-performance computers in the car, what our role can be in operating systems, what our contribution and our system deliveries can be in autonomous driving. This will be the focus, and out of this, including the rubber group, building the whole group strategy for the years to come. After we did not have an investor day for some years now in this changed environment, it is something which the market rightly expects from us, and this is what we will discuss in this investor day, including our midterm targets.
And in terms of strategy, Wolfgang, we've been reporting here at Bloomberg that you're looking to sell part of your business, the turbocharger business. What is the status of those discussions, and are you looking to sell other units?
You know that we have this Transformation C program running, which is the adaptation of Continental structure to the future of our business. And we have always said, when we started to announce this Transformation C program, that this will include as well portfolio adjustments where they are necessary to make sure that we are moving in that direction where we want to concentrate us. Example, in powertrain Vitesco, we want to concentrate on electrification. Yes, and this includes then that the one or other unit might not be in the long run right at Continental. Continental might not be the right owner for that, and their disinvestitures might be coming. I don't want to comment on specific areas, but yes, you can expect some things over the next 12 months to happen.
Wolfgang, are you contingency planning around Brexit? Are you buying warehouse space and adding to stockpiles, for example?
Yeah, we had sufficient time now to prepare for that. I think we are not so much affected, but yes, we deliver tires. We are delivering tires, and we are in the UK market for tires. They are imported. We are provisioning for that. We do as well deliver parts to the car production in the UK. We are partly producing even in the UK. And yes, we are preparing for all these scenarios which might happen at the end of this year.
Do you think you're going to have to produce more in the UK if there is a no deal to enable to supply those UK producers, Wolfgang?
Well, this is obviously a decision which has to be made very much focused on the specific product you are talking about. For some products, even if there would be less favorable trade agreements as we have them now in place, it might still not make sense to do a small unit of a product which has economies of scale to produce this in the UK, still might have to be imported. I think this will be true for most of the products which we are selling in the UK. For the one or other part, it might make sense to move production into the UK. I don't see much of that, though.
What kind of impact do you expect this Brexit process to have on just-in-time manufacture? If we assume there's no deal, where does that leave the just-in-time manufacturing process, of which you are a part, of course, because you, as you say, you supply some of those parts to UK manufacturing?
Well, where it is a real tough just-in-time and just-in-sequence process, we are already having the production in the UK to deliver to the car maker just in time, just in sequence, so basically on an hourly basis. Everything else, we believe, can as well be managed as it is today, partly with supply chains which are not having the latest production point in the US, but have that outside, and then we deliver from there with some buffer in between, obviously, in the UK.